You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with your favorite bi-weekly, at least I hope it's your favorite bi-weekly options show. I don't know of any others, so I guess we win by default. Yes, it is time for the option block. As the man said, my name is Mark Longo, coming at you live every Monday and Thursday, noon Central, 1 p.m. Eastern, so you can join us there if you'd like to get your options info immediately in the old air holes. Otherwise, podcasts available pretty much everywhere you can find them. Some of you asked about the archives on the website. Yeah, you know, we had some issues a few weeks ago or so with some people, let's say, paying aggressive attention to our website, which just shows we're targets for all the big folks out there, which is always fun. And as we're fixing that, we said, you know, there's a lot of work to do to do all that stuff. Maybe we've been thinking about flipping the switch on like an Insider 4 or 5.0. I forget which version. We spent so many iterations over the 10, 11, almost coming up on 12 years, which is crazy. So the site's gone through many iterations. I think a new one is in order. We've been planning it for a little bit of a little bit of time. So I think maybe we're going to pull the trigger on that instead. So if you are one of the people out there who uses the web archives, we'll put some other links out there for you to route around to. But everything else is still up there. Obviously, of course, you can always get it on. Most of you get it via iTunes or other platforms like that. It's all available on all those still. Of course, the live is still there. The mobile app is still there. All the other platforms, the choice RSS feed. Just the web archives for some of the shows are a little bit of a hiatus right now. But we'll put up some workarounds for you in the meantime. And hopefully soon, maybe you'll see a nice, cool new Insider 4 to 5.0. I'll have to check on the iterations there, and it'll offer all sorts of cool new functionality. So stay tuned for that in the interim. Those of you who like to live via the webpage, we'll get you covered. Don't worry. And in the meantime, we got some fun shows coming at you here, and joining me to help you do just that. Of course, let's go out first off via the magic of this newfangled technology called telephone to Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes the internet in St. Charles, sir?
We're surviving. We're surviving. Just having some Skype / technology issues, so please forgive my cell phone connection. But hey, the telephone is one of the inventions that changed the world, so you can't knock it too much.
Next, we're going to do it by that magic of the printing press. So stay tuned for that there, listeners. We're going back in time here. with technology. Now going back, speaking of back in time, this is a land some may say is sometimes lost in time. We shall see, also known as Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the show. I am sad to hear that you will not be coming to our cozy environs of Chicago. After all, I guess the how inconsiderate of a president to pass away and then therefore eliminate your event, sir.
Yeah, I guess we could blame George Herbert Walker, but I'm not going to do that. But yes, it is sad. Plus, we're launching our spreadsheet doing stuff product, which is going to be pretty much the most awesome option product ever created. So that's a bummer. So we're pushing that back a month. But we'll talk about that at the end of the show.
Yeah, we shall do that. So those of you who are planning on hopefully seeing the Rock Lobster in time, I don't mind seeing the Rock Lobster. Once a year is a good frequency to see the Rock Lobster, but we'll see him, I guess, in a month or so. We'll get to that as we get into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we talk about, hey, what the heck is trading? And pretty much across the board, listeners, it is a love fest. Everyone was wondering what's going to happen over here on the old meeting here with Trump and his counterpart over there in China. Are they going to hug? Are they going to play and make nice? They're going to kiss and make up? Is he going to slap the man in the face? What's going to happen? The market waited with bated breath. And now we know, looks like we got a little bit of détente, shall we say, in the ongoing trade war. Not so much with ratcheting up the flames anymore. And guess what? The market likes that. The market says woohoo to all sorts of pausing in the trade war. Pretty much everything across the board is up. Dow up, pretty much everything up about 1% or so. Dow up a little bit, about 1%. S&P just broke through a little bit less than 1%, 0.97 to be precise. NASDAQ up over 1%, about 1.3%. Even gold up 1%. Crude up over 3%. About a handle and change out there, 1.6 handles out there in WTI. So pretty much across the board, we got green. And you know what that means, listeners. When there's green on the screen, that means there's red, usually in one area, and that is ye old VIX cash taking a break, taking a relaxing sojourn to the downside today, listeners, off about a handle and a half, or percent of percent fans, 1.5%, or excuse me, 8.14%. So I know some of you really love that out there. But yeah, about 1660 or so out there in VIX land. That looks like, actually, it's not the low of the day. Low of the day was 1612. So we're off those lows here, as the market is also off some of its highs as well. So again, the first blush, everyone's super excited. Then calmer, cooler, saner heads tend to prevail. Interesting stuff out there. Let's start via the magic of telephone. Mr. Uncle Mike, sir, bulls in full force, trade war, a distant memory. What's catching your eye in today's market, sir?
Well, I'm just going to quote the Lego movie. Everything is awesome. I mean, what's not to like about this market? Until tomorrow when we don't like it, whatever the case may be. But no, I think today's it's definitely a reaction to what's going on with trade at this stage. I think that the fact that we were around the starting point for the year in the S&P, I think that did kind of serve as kind of a mental support type of a thing for the marketplace. And with the fact that President Trump didn't go WWE on everybody at the trade meetings this weekend, I think is definitely a good sign for the markets. What's going to be interesting to see, we have a lot coming out over the course of the next couple of weeks in terms of macro news, in particular unemployment coming out this Friday. So there's a teaser for around the block. But with that, I think that the fact that we have cooler, calmer heads prevailing, at least for now, from our world leaders, the market's liking that at this stage. And if we get some follow through, that would be great for those of us bulls out there. And this is just what I'm excited about is that a few weeks ago, I put on some out of the money butterflies on SPY. And as the market went, I didn't put a huge amount of money into it, but as the market went down, closed out the body as well as the upper leg of it. And so now I have a long call that I'm hoping is going to make me smile here. It's already made me smile a little bit, but if we have a little bit of follow through, I'm hoping it really makes me smile here in the next couple of weeks. So we'll see what happens. And that's kind of what's going on right now.
So has this is obviously a bit of a blip here on the trade war screen. I was joking when I said the trade war is over, but has any of this really, I know I joke you're the perma bull, but has any of this given you renewed enthusiasm for your bullish love, or are you still cautiously optimistic, sir?
I'm always cautiously optimistic. You know me, Mark. I have the compliance people listening to my every word, so I can't be anything more than cautiously optimistic now. But I think that I'm very optimistic at this stage, just because of the fact that we've held, for the most part, we have not been negative on this year. And there's been a lot of negative news recently over the last few months, but a lot of it has to do with interest rates and the trade war. And so we don't have clarity, so to speak, on interest rates, but they said we're just below neutral with interest rates. And then now with this news coming out with at least it's not bad. So the market is viewing not bad as good. And so if not bad that is being viewed as good becomes good, then I think we have a lot of great things ahead of us in the marketplace for the time being. But as always, manage risk accordingly.
There you go. A lot of great things ahead of us. I expect nothing less than from our perma bull, Mr. Uncle Mike. Mr. Rock Lobster, you're not quite the perma bull. Some might call you a cynic. So what is catching your eye amidst all this just effervescent joy and euphoria in the market today, sir?
Well, we can't be as bullish as Mr. Tosaw. That doesn't mean I am. Let's cautiously. I don't know if I'm. Let's see. I don't really know if I'm
cautiously really pessimistic. How about that?
I'm cautiously pessimistic. Let's a little bit like that. The first is, so when all this trade war stuff was happening and interest rates were kind of up in the air and all this, VIX at the SPX SPY was 293 and VIX was like, 10.5 or 11, something like that. And that was in September. And then we had some, I would say, okay, but not great numbers from technology shares that were trading at pretty high multiples. Like NVIDIA lost half its market value from the top. Amazon lost about 25% of its market value from the top, although it's bounced back quite a bit. Google and Microsoft held up pretty well. So Facebook, they slapped that for about $100 market cap, or $80. So they lost 35 or 40% of their market cap, something like that. So we have had what I would just call a very healthy adjustment in the values of a lot of companies. Now, if the Fed maybe slows down a little bit, since the rest of the world can't quite catch up, if we see how this new Congress sets up, do we have any stability? So to paint
hold on, sir. You're breaking up on us a little bit there. Hello?
Well, how about now?
Oh, that's better, yeah. Go back like 2 sentences.
Oh, okay. So I think part of this was like G7 debt. Another part was Italy fighting with the EU and the ECB. So there was, there was lots of there were little things that just everybody kind of lost.
Yep, we're losing you again. It's like you're fading out on us or something. It's like you're fading away into the nether realm, sir. Are you there, Andrew? Do you need me to send you a lifeline?
Well, I'm trying to be here, but apparently it's not working very well. Of course, I talk on this mic all the time. Is it dead?
Make fun of the telephone now, huh?
Yes.
Is it dead?
No, I can hear you. Just 'cause every once in a while it seems to fade out in the middle of when you're talking. Maybe, I don't know, maybe it's falling away from your mouth or something. I don't know.
Well, hopefully not. Anyway, so what we had October, November, there was all this.
Yep, we lost you again. Hello? We shall reconnect, listeners, with ye old Rock Lobster and get him situated here. on the old show. Here, let me just see here if I could get him. I can't. It's the new. I will say this for Mr. Uncle Mike. Microsoft bought Skype for what? $8+ billion. They spent how many hundreds of millions, if not billions, more upgrading it and everything else. And every single iteration they do to this thing makes it just demonstrably worse. Oh, are you there, Mr. Rock Lobster? You there?
Can you hear me?
I can hear you now. Yes. There we go.
Yeah, I don't know why I'm looking at my microphone.
And you sound much better now. Whatever you did, do that exactly for the rest of the hour.
All right.
He's standing on one foot with two hands over his head and
whatever you got to do, do it there, sir.
And I'm rolling my eyes at the same time. It's really hard to do that. So just long story short, everybody was pretty giddy this year. Then the trade wars happened and all the giddiness went away. Then we got close to all-time highs. And we stopped there, and then we ran out of good news. So I think that's kind of normal, but I think at this point, to get to the levels that we need some good news. We need some great earnings. We need some good stuff out of Europe. We need some good trade information. Maybe oil prices stabilizing. I guess the market hates low oil prices now. So you need some good news. So is this a buying opportunity? Probably. I grabbed a couple of stocks. I grabbed a little Apple, grabbed a little GE, grabbed a little more Twitter. On this little pullback and some vol puts. But so as of right now, we'll see what happens. I think I'd like to add some NVIDIA just because I don't think all the good stuff has gone away and everything's kind of come way, way, way off. So is it time to get crazy long? I don't know about getting crazy long, but definitely, looking for some of the better names that got spanked.
Speaking of getting crazy, it's our turn to do just that. It is time to get into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it's time to get funky here on the old Odd Block, the weird, the wild, the wondrous. Now let's see what's actually lighting it up on today's tape as well. Courtesy of our friends over there at Trade Alert. They do some sweet scans for us. And looking at their most active, these are your equity options underlying, so not your SPYs, not your VIXs, just kind of your plain old equity options. Number one, you probably can guess it, still Apple, 415,000. Apple up another 4 handles today, about 2 1/3% out there, 182 3/4. So Apple feeling some love. It still dominates the charts. Number two, AMD. 322,000, excuse me. Number 3, BABA, 279,000. Number 4, GE. We'll get to them in a little bit. 215,000. Number 5, Bank of America, about a little bit shy of 200K. Number 6, Amazon and NVIDIA, both tied with 152,000 for 6 and 7. 8, good old Facebook, 141,000. Number 9, Microsoft, 136,000. Number 10, ye old Tesla, our old friend Tesla, 135,000 contracts on the tape. Not a bad day here for good old Tesla. Tesla up 10 handles, or nearly 3% on today's activity. So a lot of things lighting it up down there, including, let's see, on a day like today, let's see if ye old puts are lighting up. And the GPOR puts are lighting it up. We see a block of about 800 paper buying those for about 30 cents. So again, our old friends, the GPORs, pretty active. March par is also going up. 600 contracts are there. That's hitting the bid though for $1.33. So maybe someone getting the heck out of Dodge on those bad buys, or perhaps drawing a line in the sand saying par and no farther. That would be an interesting choice, but we've seen crazier things out there with Jan 13s and 15s, all sorts of weird stuff out. 13 puts trading for 2 cents. Over 1,000 times, 1,500 times, 2,000. What is it? Who is trading these for a penny or 2 cents? Someone bought over 1,000 of these things. Jan 13 strike for 2 cents today, listeners. So opening. That's all opening paper out there. So apparently, Mr. Rock Lobster the madness has not satiated itself in Tesla. Someone loading up on thousands, or at least at least 1,000 or so here, Mike, I can see, of the Jan 13 puts. How do those float your boat in Tesla, sir, for 2 cents? This is not Jan 2020. This is Jan 13.
Did anybody notice that Tesla's trading near an all-time high again? Or might even be making an all-time high?
Let me see. Let me pull up my chart here, and we shall see. I'm going to hit the max chart. And, the 52-week high is 387, sir. So we're not quite there.
No, but
360. Well, we could be there in 5 minutes with Tesla, right?
It could be, but I mean, it's. I find it. It seems like people. Here's a closet theme. I think people are buying puts and stock in there. So, we thought originally, there could be like credit default swaps, and I know they have a lot of debt, so I'm sure there's some of that in some of the buying. Now, why you would buy a put like that in January?
You're getting a lot of deltas for those Jan 13 puts. Your 0.01 delta puts. I don't know why
those are going to help right now. I think the longer term ones definitely could have been, but I really do not know why you would do that right now. I think some people, and I know this is a crazy idea, but some people buy options and don't know exactly what to do with them, what they do. Did you know that, Mark?
Years of doing this show have taught me that, yes, sir. That some people put on for size. So we say it, right? The size money, not always, usually not even close to the smart money. And that is pretty much perhaps the case here. We never know. The 13 strike could look super savvy in retrospect. But if we hit 13, there could have been some better choices maybe you had along the way. I'm just going to guess for that. But we've seen it before. These are very much at this point a pure Vega trade because these things can move with not too much move in the underlying. So we have seen these things move around, but the clock is ticking on these bad boys, so we shall see. But talking about the other name that lit up is lighting up the tape right now on our top 10 today, but also was active last week, Mr. Rock Lobster. I know it came across your radar as well. Was GE. Everybody was talking about how GE just lighting it up, of course, talking about how they're closing some plants, getting some heat from the commander-in-chief as a result here. So a lot of pressure on GE of late. In fact, let's see how GE is looking right now. GE 782, up about a third of a point, or about 4.25%. Of course, over the last month, they were trading about almost 9.5 not too long ago. So they're off quite a bit from those near-term highs there. Last week, everyone was talking about Henry. Our buddy, the Flow Master, was tweeting about how they were the GE options were the second most active single equity option class last week, with nearly 2 million contracts on the tape. Implied vol nearly 60% all the way out to Jan 2021 expiration. So put that in your pipe and smoke it out there for GE being some staid, boring stock. I know, Mr. Rocklofster, you've been watching all the GE puts that have been lighting it up out there. What's been coming across your tape in GE, sir?
So just a little. Guess what the open interest on the Jan 2019 6 put is. Just dazzle us with your
122,000.
That would be low by 371,000.
Wow.
Puts.
Size, sir. Size. I knew a ton was printing. I wasn't sure it was all on that strike.
So this was an example of, for some of my option pit people in our gold course, about, a month ago, what I thought was, even though the implied vol was kind of high for GE, I thought it was radically cheap given what was going on. And at the time, GE was trading, I think, $12. And I think you could bet like the 11-13 straddle for less than $2. Some clients did it and they made some money, and then GE blew apart literally, and then they made a lot of money. So right now, to me, it's kind of in the same thing, but not quite, where I feel it's dead money in the short term, but it's probably not going to be an $8 stock or $7.50 stock forever. So I think somebody bought a bunch of puts and they bought some stock in this name, and I'm not quite sure why, because I think they paid 19 cents for the Jan 6 puts 300,000 times. Right, so that's what, 30 million share equivalent. So somebody wants some gamma in the stock. I actually did the decay on it just for fun. So the decay on that position, if they bought stock, was, it's a small number. It is $158,000 a day in decay. Okay. They have 4 million gammas if they bought that position. As of right now, go ahead.
I said that's a lot of gamma.
Yes, if they bought the stock delta neutral at the time, they're up $500,000. So I think that was when this print went up. GE was trading. This was Friday, Monday. This was Friday, and the low was. I think the low there was 860. No. Hold on here. Let me get you the right number here. So Friday, that was the 30th. Yeah, it was the low tick of that day was about $7.40. So they were pretty close to the low. So they're down a little bit of money if they bought stock on the low tick, about $200,000. They have 4 million gamma with that position if they bought stock and puts delta neutral. So my thought is I think you buy like a stock and put position, something like that. Even longer term, I think 55 vol doesn't mean anything in the $7 stock, $8 stock. Still pretty low because it's now an $8 stock. It's not a $35 or $40 stock anymore that doesn't do anything. And then you just pay for it by writing ratio put spreads in front of it. So that trade set up very well, and you just see what you get. You know, you place your bets and you see what happens. So I think that has pretty good potential. So that's something I like as a trade. But when I saw that go up, somebody I think just wants this thing to move enormously big, and that's, and I can't disagree because it's like the news is is it going bankrupt, or they're selling this, or they're going to split it apart. I mean, there's so much news on it. I think there's some money to be made, and I do not think it's going to be a $7 or an $8 stock forever, because it's anyway. So that's what I think. We should see some movement. That's the bottom line. Somewhere, somehow, where somebody's going to give away 330,000 contracts for 19 cents.
If you got that much gamma on, you better have a pretty deft scalping hand, is all I'm going to say. That decay is you got a lot of decay to fight against over there. Yep. And we all know that could be a full-time job in and of itself. And if you get too aggressive with it, though, of course you miss the big move, right? So it's a subtle art / science, gamma scalping. And I wish luck to that person who is now tasked with defending against, what was it, $153,000 a day in decay?
As of right now, it's $162,000 a day.
Ticking up there. Look at that. Amazing how theta works. So yeah, get at it, sir. Stop listening to us and get scalping. You got some money to make back there. So yeah, see, it's not just you listeners out there. Even the big positions can have issues and suffer from all sorts of issues that they have to deal with, just like you. So let's get on here to some other names. GE, of course, on everybody's radar last week. Some other ones maybe not on your radar, but they came across our eye of Sauron. It sees all. Even if we don't talk about all here on the show, we see all. You can't escape us. Let's get out here to, looks like some interesting prints here in Gulfport Energy Corp. This ticker symbol GPOR. Trading today, $8.72, up about 20 cents or about 2.25% out here. As the name implies, this is obviously an energy exploration and production type company. Let's see here. This one, let's go look at what we saw printing out here first. This one's a little bit weird because it didn't go up as a spread, which is why first off our scan was kind of like, huh? Then we started piecing it together a little bit more, and we realized that that was not indeed the case. That it was indeed a spread. If I could pull up the right, what is going on here? Why is that going on like that? There we go. All right. So yeah, so let's look here what we saw. First, we saw a big print of what was it? It was 12,000 of the June 10 calls going up for an even buck. which was pretty much near the bid, but close to mid-market as well. So it looked like possible opening call sale here for a decent size, 12,000 times here for $1. By the way, all this paper we're going to talk about here is opening. Then we started digging a little bit further, and we realized, no, actually there were successive prints, all went up at the same time. None of them marked spread, so the broker not doing our job for us, making us do the extra lifting. And we saw earlier, or actually at the same time, we also saw 5,500 of the June 7/2 going up for 215. So now we start doing a little bit of that math. Okay, not quite 1x2, not quite a fly, but getting there, a little bit of a ratio spread. So it looks like they're buying those for 215, 5,500 times. Again, opening. That was, again, mid-market, but closer to the offer. So you could maybe reasonably intuit they're probably buying those, maybe selling 2 now. So, or not quite 2. Actually, it looks like a little bit more than 2. So not quite doing that for $1.15, a little bit less there. Then looks like coming back again, though, and then trading 26,000 of the June 12/2 calls for 45 cents. Again, actually exactly mid-market on those bad boys. So maybe you could intuit maybe buying 1, selling a little bit more than 2, and then buying 4. It's 4 and change. That's what makes it interesting, Mr. Rock Lobster, is the ratios on this one. So buying 1, selling 2, we've seen that a lot, and then having the kicker on the upside just in case. But either way, it's interesting. Usually the premium sometimes dictates the numbers on these things, so that's probably why the numbers are not quite 1x2x4, something like that. It's a little bit different, but still an interesting one. Looks like, though, Mr. Rock Lobster, they're coming in and buying the 7/2, and that's kind of what kicks off the whole kit and caboodle. And then they're looking for a gap up to 10 or so, and then kind of sitting there. And then if it explodes beyond that, they got kickers beyond that as well. So interesting stuff. Are you on board with that train? Think something else is going on, Mr. Rock Lobster? And also, before we do that, let me check in really quickly, because everyone's familiar with GPOR. Let's look at a one-year chart here. A year ago, it was trading $12.77. And it got as low as pretty much near where it is right now, about 8.30. Then got back up to nearly about 13 change back in July. Then it's kind of been slowly moving to the downside ever since. Obviously, we've seen some rough waters in the energy markets of late, so that's been weighing on it a bit too. And so here, 870 now, kind of at the low end of that 52-week range. Mr. Rock Lobster, someone maybe looking at, first off, picking up some in-the-money calls, and then saying maybe upside Palooza ahead here for Gulfport. What's your thoughts here on this? Not quite fly, not quite, ratio, but funky one nonetheless.
All of these offshore drillers have really gotten pounded. Like they seem to be the redheaded stepchild of all the oil exploration stocks. Because I follow Rig and Diamond Offshore and all that, and they look horrible. It feels like it's a business that's going to take forever to get off the mattress, or off the mat. So this one, I think they're trying to get some kind of upside out of this. 1x2 sounds reasonable, and sort of see where it goes. I'm not. They're not looking for a lot. It feels like they're buying one. It's a tough one here because it's kind of mid-market, but it does feel like buying one and selling some, and just see where the market goes. But basically, they're just looking for nothing to happen for literally. This trade says oil prices are going to be in the basement for 6 months at least. The way I look at that.
Yeah, this guy needs obviously a little bit of upside here on this bad boy, but not looking for the love here. For of course today's move where he's on crude up. What did I say? Up close to 3% or so today alone. So interesting stuff. The crude markets on fire. Nat gas, as we know, listening to Twifo. Nat gas also on fire, moving in different directions, usually, not so much today. But interesting stuff out here in energy land. So I think it's not the last time we'll be hearing about energy, including perhaps even our next name. This is a resources name, so probably more on the precious metal side. But still, this is Pretium Resources, Inc., ticker symbol PVG. Trading today, $7.10. This thing is pretty much unched on the day. Not a huge move in today's actually a little bit earlier today. It was trading 730. So I guess it is. It had a little bit of a pop earlier today, so I guess it got up to 740. So I guess it is off about 30-odd cents from its highs here intraday, which is a decent move for this bad boy. As I mentioned, this is a resource now, precious metals exploration company. What we saw out here today, our Eye of Sauron, ever watching, ever scanning. We picked up March 7 puts. Let's see here. March 7 puts going up for 75 cents. These are lifting the offer here, so no ifs, ands, or buts about this one. This guy's gobbling up some puts. They were a dime wide, 65 cents at 75 when this trade went up nearly 10,000 times, 9,958, which is a big print for this name. This is opening paper here, as you might expect for this type of size here on a name like this. So March 7 puts, 75 cents. Let's go out and check in at our friend Pretium, maybe Pretium, not sure how you pronounce that. They were trading about $12, close to it, about a year ago. Actually, that's year to date. I want to go a little bit farther than that. So yeah, a year ago they were trading about 10.30, so still higher than where they are right now. They got up to about close to $12. 11.90 to be precise back at the beginning of the year. Then they kind of sold off hard in the immediate aftermath of Feb-Apocalypse. They got down to 6 and change, so they were feeling the heat, and they've kind of been vacillating around ever since. Got up to 9.25 back in July, so they've had some good runs, but it looks like they haven't been able to sustain it. The chart looks like a lot of spikes followed by sell-offs again. So it's been choppy waters, turbulent times out here in Pretium Resources. You can maybe see why someone might be a little bit spooked by this bad boy and decide maybe pick up a little bit of protection. At the same time, though, this protection level they're locking in with this price is pretty much right around the lows of the stock. So they're stopping themselves out, I guess, when the worst has come to pass at that point. So maybe some chartists might take issue with that. I'm not a technician, so I'll leave that to them. But interesting stuff here, Mr. Rock Lobster. This looks like our old friend buy some puts in case the worst comes to pass. What you feeling here, sir?
Pretium Resources. I'm a little dubious buying anything in something called Pretium Resources. Right there, my spidey senses go up right away.
Just the name alone, you're like, I'm out.
I don't even know what this company does, but it is a pretty good chunk of options. Pretty good chunk of options in March, and this feels like kind of a protection, worried about the downside play. Vol's up a little bit, so somebody's buying some juice in here. So maybe this doesn't feel like the line in the sand put, where they just sell the ridiculous put and see what happens. This is very much an in-play option. So, but it would yield 10% to March, which isn't a bad place to sell an option, but it doesn't look. It feels like kind of more of an active purchase to me. So, and what do we have? 17,000 of these things up on the day. So somehow it feels like they're buying these things and, protection or they think, things are going to go to heck in a handbasket. Pretium is going to be ugly, is what they're saying.
Yeah, this name only does about 2,500 contracts a day, which is good paper for the odd block, but not certainly nowhere near 10,000, let alone how many more these puts have been lighting it up today. Because total many thousands going up here today. 19,000 looks like total. So a lot of paper lighting it up. At least a lot of total contracts on Pretium. I'll check on many of those are the puts, but many orders of magnitude beyond what their ADV is out here, which is intriguing. I think we'll put this one in the to be watched category to see how it plays out. Meanwhile, let's keep on rolling. It's time for Uncle Mike to break in that telephone. It's time to do the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the show Uncle Mike holds court on some options topic of note. Uncle Mike, sir, are you ready to test out that brand spanking new technology, sir, with the Strat Block?
I am ready.
All right, have at it, sir. The floor is yours.
All right. Well, it's always good to have the floor, especially here on a Strategy Block Monday. I want to talk today about purchasing long delta in the option space and some things that I've been doing the last year, and just want to give you a general idea of some thoughts that I think might make some sense. Earlier in the year, I remember being made fun of by Mark and Andrew and Mark and pretty much everyone I've ever met for that reason on buying out of the money calls and actually making money on them. I was actually kind of embarrassed myself in some ways. I had bought more out of the money calls in late 2017, early 2018 than I have in 15 years of trading, quite frankly. But they were justified. And the reason was that implied volatility was low, and I took a small position on all of them. And where I was able to have some success was just from gamma, quite frankly. Markets would go higher, and with the calls as low priced as they were, we were able to benefit from them. Now, fast forward a few months, and we don't have a 9 VIX anymore. We're not debating over when will the VIX go to double digits, how long will it stay there, can the VIX go to 7, can it go to 8? We're not having those conversations right now. So with that being said, we've been able to take some profits this year on those out-of-the-money calls and in the aggressive strategy in general, where we do a variety of things, diagonals, call spreads, and just a lot of things that I'll talk about on the strategy block in general in the aggressive section of the portfolio that will work. But right now, a couple of weeks ago, wanted to do something where we were buying on the dip, but yet not putting a lot of money on the table. First thing, side note that I want to mention before I do anything with this is that at our option club, or at our St. Charles Investment Club meeting a few weeks ago, someone brought up the point, what should come first, risk management or your indicators? Let's say you have an indicator that's screaming buy or screaming sell, whatever the case may be, but maybe you're a little bit you have a little bit too much money at risk already. Should you maybe borrow some more to put on the trade, or whatever the case may be? I want to emphasize unequivocally and categorically that risk management needs to come first 10 times out of 10 over indicators. I don't care how wonderful your setup looks, whatever the market's doing. I don't care how well the market's going to go one way or the other. And I'm saying no in air quotes because no one really knows what it's going to do. Risk management has to come first. So with that being said, market dipped a little bit in October. And so I wanted to buy some of the dip. Now, with that being said, once again, risk management comes before indicators. I've very, very few times have I ever found a dip in the market I didn't like. So how do we take advantage of that? Now, we're ahead on the year. Even though the market was back to about even on the year, we were still well ahead, pretty decent amount with this strategy, just because we've taken a lot off the table. So with that, I don't want to take a good year and make it into a bad year by putting a lot on the table. So I'm thinking, okay, I know this isn't going to work, but what would it cost to buy an out-of-the-money call on SPY? And I looked at it, I'm like, holy cow, that's way too much money because, volatility is a lot higher right now. So what we decided to do was buy an out-of-the-money bullish butterfly. And the reason for that was that we set the wings and the body far enough apart to where if the market would have continued to go higher, we still feel that we could have made a profit on it. But the reason we did that was because we wanted to have bullish exposure to the marketplace, but we didn't want to have a lot of downside. We wanted to take a small amount of money, even in the small amount of money we already have set aside for the aggressive strategy, and have bullish exposure. So the market's going to do one of three things. Should the market stay the same? Well, we didn't have a lot of risk on the table because the butterfly was not very expensive, and it would be similar to the out-of-the-money call that we had in the first place. Should the market go higher? Well, we do have some exposure to the marketplace, and we believe that if the market were to go higher, volatility would go lower, and yes, it would hurt the too short leg or the body of the butterfly, but we don't feel it would hurt in a harsh enough way to where it would ruin the trade by any means, because we believe that volatility would come down and kind of aid us along those lines. But neither of those two things happened. The market went down. So with that, what we ended up doing, we didn't do it all at once. We ended up getting out of the body of the butterfly as well as the upper leg, And then we just kind of held on to the long call. The long call wasn't worth that much, but with that, we didn't have a lot out there in the first place. And that's the beauty of options. The most you can possibly lose is what you put into it. You don't have to worry about margin calls. You don't have to look at it and say, ooh, I'm down 10%, oh, 15%. And with that, because with the option, it's not like a stock. You just simply lose everything right away. And if it's a small amount of money, you say, all right, well, let's try it again. So with that call that was out of the money, we just held on to it. Now the market's rallied back. So now we're in a position to where we have a profitable call, although not by a lot, but we have a profitable call, and markets are at levels now to where it can become much more profitable should the market come back and we have another couple 60-point days, then it's going to be a very beneficial trade. Right now, it's not that beneficial. It hasn't really hurt us that much. It hasn't really helped us that much. We're a little bit ahead on it. But the point is that have proper risk management. And if you want to have a smaller amount of exposure in the marketplace, buying an out-of-the-money call is not necessarily a bad thing, but you just have to have a small amount of money on the table because it's very easy to lose 100%. But 100% of something very minimal can be a lot better than 10% of your net worth. If volatility is too high and you don't want to have that much risk out there because of the high premiums, then perhaps look at a vertical spread or a bullish butterfly. Once again, this isn't going to fit in every stock for every person, so consult with your financial advisor first on this, most financial advisors don't do this, so contact me first if you're interested in doing this. Shameless plug, and I'll be happy to work with you on it. And that is the first December strategy block of the year.
There you go. Well done, sir. That old technology holding up. And let's see if you guys hold it up with a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is where you guys take the reins. You ask us questions. We ask you questions every now and then. Like this week, it's coming into the wee hours. You guys have been piling into this one like crazy. Go figure. You guys like an Apple poll. Who'd have thunk it? But you guys have all been sounding off. If you haven't, you got about 7 hours left to chime in at options, make your voice heard over there. We asked you guys, Apple, you guys love to trade it. It was selling off at the time we wrote that. It had just broken through 175 to the downside. Said, where are you looking? The Jan 150 puts, you want to buy them or sell them for $1.65, or the Jan 200 calls, do you want to buy them or sell them for $1? 42% of you right now saying $1.65, you want to sell those puts, baby. And then 25% saying you want to buy the calls. So a whopping 67% maybe interested in a little bit of a risk reversal there. We shall see 21% saying buying that put. So not a lot of love for selling there. And only 12% saying you're buying the ups. I thought that would do a little bit better given Apple's history with the Apple zealots out there wanting to buy themselves some calls here. We got a bunch of stuff. We got Chinook. Chinook chiming in. He says he's listening to option block 762, and he wanted us to know that there are hidden oil wells all over the city of Los Angeles. I believe he's referring to, we were talking on that episode, there was I think it might have been California Resources. We had some unusual activity in that one. I think I was joking on the show, oh, what do? They manage the La Brea tar pits? Well, no, he sent us a link to, I love our listeners, they pull up all kinds of good stuff. A link to the hidden oil rigs of Los Angeles. Apparently there are 20 billion barrels of oil sitting beneath LA, Mr. Rock Lobster and Uncle Mike. So I have yet to check out this video. It seems intriguing. So there we go. Our listeners, always fonts of knowledge here on the old outlaw. I'll check that out though, Mr. Chinook. That looks interesting. We also got people chiming off. Mark Brandt, your buddy there on the chat. He's giving you a hard time in the chat here, Mr. Rock Lobster. He says Andrew and the Meatball miss a lot of VIX trades because your bias is to the downside, huh? What do you think about that? He says he's looking at upside. He said his bias is always up, looking at 16 delta calls here in VIX. Also says he bought a bunch of Doge. That's one of those altcoins because it was cheaper than Bitcoin. And he says that's looking out pretty good. So what do you think about that? He says you're biased to the downside in VIX, Mr. Rock Lobster.
I'm only biased to the downside in VIX when I think it's a decent trade. So the last, in our vol newsletter, we've had actually a lot of long vol trades, or basically a lot of long strangles and stuff. So the meatball might be a little more sell side, downside bias than I am. So that's what I would say to that. I still more conditionally aware, and I think vol looks like it's subsiding a little bit, but I'm not ready to say that the vol is done by any stretch right now. So, Mr. Brandt, I don't totally agree with your assessment of the rock lobster.
He poo-poos you, sir. I guess you poo him right back. By the way, if you're wondering, Dogecoin right now is at a whopping 0.0022 cents. So there you go. For those of you who want a cheaper alternative to Bitcoin, which is shy of 4,000, I haven't checked today if it still is, but it had recently broke through 4,000 to the downside. Maybe a 0.0022 cents is more up your alley. Let's see. We got a bunch of questions. We got to keep rolling. We got a little bit of a late start here today, listeners. We do apologize. Working out those technical issues with magical things like telephone. Sometimes a challenge as we keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
The chat's lagging. They're saying I'm stirring things up. I'm not stirring things up. I'm just reading what you guys are saying. I'm just expressing your sentiment. If it adds a little bit of incendiary nature to the show, so be it. Hey, I am the host after all. All right, let's go around the block, see what's catch. A bit of a weird one this week, Mr. Rockoff. So maybe we should start with that. And we have some questions about this, I think, too. But it obviously directly impacted you. We, of course, had the untimely passing away of a president and the unplanned holiday, midweek holiday for the markets, which is a bit of a weird scenario. We don't usually find ourselves with a no trading day randomly in the middle of the week. When that happens, usually it's some sort of horrible event like a 9/11, and it extends for a while. So this one at least encapsulated to one day. Also, they had the presence of mind to not make it a Monday, to tell people, hey, oh, by the way, you're closed now on a Monday as well. You can't do any adjustments. That would have been a disaster. Obviously, they said, let's push it out a couple of days to Wednesday, give people the chance to plan for that one. But obviously, Mr. Rockloff, so you yourself have been directly impacted by this. No longer are you coming to the great environs of Chicago as a result, so you can blame Herbert Walker for that. But any words of wisdom or caution for perhaps dealing with a midweek unplanned day off like this, sir?
Words of wisdom or caution. You know what? Any day off where the market's not open, I tend to rest and do non-market-like things for a while, and actually just think about strategy and trades and stuff that I might want to do, because you don't have kind of the buzz of the market sort of in your head. So I would say, take the day off from trading because it's a day off. And actually, I tell clients all the time that they go on vacation, they want to put something. I go, just go on vacation. The market will be here when you get back. Just go on vacation. Don't do anything. So, it is an extra day of decay. So, if you own some premium, like, this morning, a couple things, I thought it was a good time to get out of some short-term vol puts and stuff like that, because we are losing a day, and, all that stuff got bid this morning, so it was worth getting rid of some of that stuff. But remember, it's a day of non-trading, so it's going to gobble up some of that theta. So I would say that, and just take the day off and enjoy your life, your non-trading life.
Yes, allow the passing away of a president to give you time to reflect upon your own life there and all the fun things you get to do when the markets are closed. But you're right, that's probably for a lot of our audience who slings in the weeklies, this could come back to bite them. Obviously, a day of decay where you can't hedge, you can't get out. So bear that in mind. If you're short and things work, you obviously getting a nice day of decay, but if the markets move against you, you can't really do much. So bear that in mind. Maybe you want to take it off as a result. Or on the long side, obviously, too, where obviously you have a day of decay where you can't really do much around it to scalp or hedge. So maybe bear that in mind too. If that's too much for you, or you just don't want to deal like the Rock just said, then maybe you just you take it off. But otherwise, as long as you're aware of what the results are there, then by all means, it's certainly better than the alternatives we've seen in the past, where some of our other unplanned holidays here in the marketplace. I use that term euphemistically. All right, Mr. Rocklobster, aside from that, what are you watching the rest of this week, sir?
I'd like to see us break through the 16 handle in VIX and see if we can get down to 14 and kind of get back to that, that potential run of bullishness that Mr. Tosaw is kind of waiting for.
Mr. Uncle Mike, what say you? What are you watching? Are you also waiting with bated breath for this extended run of bullishness you just referred to?
I'm always waiting with bated breath for the extended run of bullishness. But be cautious. I mean, don't get too euphoric too quickly. Just to have an understanding that this still is a volatile market. Be prepared, be cautious. But, yeah, I really do think this is a buying opportunity. But, like I said, you guys know me.
We do indeed. And you guys, listeners, know that music means, unfortunately, we've come to the end of another epic sojourn through the world of options. Talked a bunch of stuff. Talked crazy GE, talked crazy Tesla, talked some crazy resources stuff. Talked oil wells under LA. We talked VIX. We talked trade wars, Amazon, even talked a little Doge coin. Because why not? Why wouldn't you talk about that fun stuff? All sorts of fun stuff. Hope you enjoyed it. Again, you guys can get it on all the major platforms. The archives are going to be down for a little bit on the website while we're rejiggering and reshuffling behind the scenes. So if you go there and you see they're not there, maybe you see something that says like an error or something, don't freak out. It's there. It's on all the major platforms. You can get the RSS feed. You can grab it. The mobile app is always the best place to go because it has everything going back to the beginning. So that's another place you can go. And, of course, we'll give you some other ways to get it to. But all your major platforms, it's all still available. Of course, you can always join us live Monday and Thursday on this show, all the other shows at their usual times. Let's go back around the horn really quickly and see what everyone else has cooking. Let's start with you, Uncle Mike, sir. If people are intrigued by what you mentioned in the strat block, they want to reach out and they want to test the waters over there at St. Charles Wealth Management, maybe they just want to click on the Fox. Where should they go? What should they do?
By all means, go to stcharleswealth.com. If you're looking for a financial advisor who is not afraid of the word row, feel free to contact me.
I'm going to it right now. I'm going to click on that Fox, baby, because it's just a fun thing to do. Middle of the day, you need a little pick-me-up. Go there, click on the Fox. You get fun, all sorts of fun. There he is. There's the Fox. All right. Oh, you got a newsletter now. Look at you. Uncle Mike, sign up for your newsletter there. How often does your newsletter go out?
About once a week we're looking to do it.
Oh, Uncle Mike's. What's it called? The Uncle Mike Report?
It's actually just a weekly newsletter, but we'll call it the Uncle Mike Report. Why not?
There you go. Why not? The Uncle Mike Report. Here you are. Free branding advice all day long here. St. Charles Wealth. Click on the Fox for fame, fortune, and fabulous prizes. I'm sure the compliance will love all three of those. All right. Mr. Rock Lobster, you're not coming to Chicago. People who are hoping to see you, I'm sure, will be disappointed. But when are you coming back, and what else is cooking on the land of the pit?
Look for me to come to Chicago around January 10th. We're doing a joint event with the SIBO with their live vol product, their feed, and we have created some sheets to help investors or option traders get to information quick.
That's, of course, barring any more surprise presidential death, of course.
Yes, hopefully no more. And what's going on in the land of the pit? We have our learning how to manage positions using Greeks. That comes up not this weekend, but the weekend after. So I think it's like the 14th of December, or it's Saturday the 15th, I believe. So anyway, come to optionpit.com. Get your option learning on.
That should be your tagline. Get your learning on optionpit.com. That is the place to do it. And on behalf of the Rock Lobster and Uncle Mike, he of the Fox fame, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in great YouTube videos, listening live, commenting in the chat, all the fun stuff that you guys do. Keep it rolling. We'll keep it rolling throughout this week as well. Got some interviews hitting the show, hitting the network this week. Obviously, Wednesday, things will be closed. We'll have some content hitting the network that day as well. And then back here on Thursday, as usual, for Option Block, and TWIFO on Friday for Vol Views. And we'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.